Today was a little bit quiet out there in the markets, basically forming a candle of indecision at a time when the fear and greed index is getting slightly greedier. However, today the Fed, and more specifically Goldsby, says he sees a lot of Fed cuts coming over the next year. Now, if the economy is in such a strong place like Jay Powell wants us to believe, then why will we be seeing massive rate cuts going into next year? Then we look right here, betting on another 50 basis point rate cut in November is a call option on economic weakness. And again, that goes back to what I just said. The Fed is not going to cut rates out of the goodness of their heart. Then as we come over and look at the Fed watch tool, notice 49.6% chance the Fed is going to cut rates by another 50 basis points at the next FOMC meeting. And I want to remind you guys of this chart right here. Every single time the Fed goes on an aggressive rate cutting campaign, we already have something broken in the economy. Now, we may not know exactly what it is right here, right now, but every time in history that has occurred, we have seen bad things out here for stocks. Now, seasonality wise, we've been told September is horrible, yada, yada, yada. Well, we still have not seen that manifest just yet. And really the last 10 trading days should not be so bullish. However, the markets have been holding up relatively well. Now, to contradict that stat here just a little bit, I shared with you guys this stat on Sunday's video, and it basically goes on to say that, when the fourth quarter and we see the S&P at an all-time high, or at least a 12-month high, normally October is very bullish. Looking at the last 29 occurrences, we've had 25 Octobers be up, with only 4 of them being in the red. Now we come over and look at how the indices fared across the board. The Dow was up 61 points. The NASDAQ was up 25. S&P 500 was up 16, Russell 2000 down 0.78. Now, if we look at advancing issues versus declining, we only had 52.4% of issues advancing on the day. Then we come over and look at the sectors across the board. We saw energy leading the way again, followed by consumer cyclicals and utilities. Now, utilities, think about that more as defensive in the market. Now, luckily for me today, my home internet was down, so I only was able to place a few trades using my smartphone for a hotspot. Now, since energy was on the rise, we come over and look at crude oil real quick, and crude oil was actually down 46 cents. But let's talk about something that could actually get crude oil, really shaken to the upside, and that would be the fact that, what's going on over in the Middle East. Israel launches intense airstrikes on Hezbollah, and again, how much more escalation are we going to see? At what point will this start to affect the stock market as a whole? Now, when we come back over and we look at crude oil real quick, MACD indicator does have a bullish cross, and I'm looking for crude oil to make its way up towards 74.40. The question I have though, will we get a small pullback, set up a larger ABC pattern on the way up before making it up towards that price point? We look at the dollar index, basically consolidating down here near the lows. MACD indicator is crossed up, but if you guys watch the MACD indicator, if it gets towards the zero line while we're still near these lower levels, watch out. That could be nothing more than a recharge point for another leg lower in this market. Now we take a look at gold today. Gold basically having a candle of indecision. We have a wick on the top of the candle. We have a wick on the bottom, and we have not completed that secondary ABC pattern, which completes at about 2670. We'll see, do we go ahead and hit that target this week or not? MACD indicator right now is not showing any signs of weakness, at least not on the daily chart. But when we dive down to the 1 hour chart, notice if we stay up here around these upper levels, the MACD indicator gets towards the zero line. Watch out. That could be nothing more than a recharge point for another leg higher in this market. Now we come over and look at some of the high flyers. We look at Nvidia up 26 cents on the session, but for all intents and purposes, not a lot going on over there. We take a look at Microsoft. Microsoft was down $1.76. Then we come over and look at Nike. Nike's been ripping as of lately, but today Nike was down 32 cents on the session. Let's go take a look at FDX. All right, FedEx. FedEx came down on Friday, coming over here, filling the gap. Now, we need to be concerned with FedEx, and not because it's an individual stock, but this could be a warning of what is to come in our economy. If they cannot forecast the future, or maybe they just don't want to let us know exactly how bad it's going to be moving forward. Now, we look over here at the Dow. The Dow is still relatively close to all-time highs. Dow today up 54 cents on the session when we look at the diamonds. But keep in mind, we still have this nasty gap out here from last week down here about 416.17. Now, if we do come down and fill the gap, that would really do nothing in terms of affect the current trend that we have in this market. Down here on the 30-minute chart, MACD made it down towards the zero line, basically flat line. If you look at the range day, a relatively tight range out here for the day. Then we look at small caps. Small caps really starting to show a little bit of weakness, which is a little bit concerning. And the reason why I say this is we had inverted hammer, followed by inverted hammer, followed by a hanging man candle. All those combined, and now we're trading below the hanging man candle, could actually signify that we're going to start to get a retracement back down. And we have at least 3 gaps that need to come back and get filled on this last leg higher that we had in the market. Now, I want to make everybody aware, Apex having an 80% sale off all their valuation accounts, passing as little as 1 day. And what's even better, $85 activation fee across all account sizes. If you want to take advantage of this offer, use the link in the description box down below and use promo code Mike at checkout. Now, we come over and look at the QQQs real quick. We have a doji candle, basically a candle of indecision. MACD indicator still has a bullish cross, and we really need to get above this high volume area to really open the door up towards the next area, about 496.11. Now, we do have an ABC pattern, which would complete up here at about 510.16. But again, we need to get the umph to get really up and out of this area. Now, we dive down and look at the 1 hour chart. MACD indicator is making its way down towards the zero line, and we got to ask ourselves, all right, if this high right here ends up holding at 484.16, that would be a high, lower high. Will we set some type of ABC pattern on the way down? If we grab our Fibonacci extension tool, we measure A to B equals C to D. That would give us a price completion at about 476.22. However, to completely fill the gap, we need to come all the way down here to about 471.33. As we dive down, look at the 30-minute chart. Notice today was a D as in dog shape profile, very tight range. So what I expect for tomorrow, I expect tomorrow is either going to be a breakout or breakdown from this pattern. And we want to be on high alert for a potential trap tomorrow. Whichever way we first break, more times than not, that ends up being a false break. And then we see the market go back the other way. So if we start breaking to the upside first, watch out, that could be nothing more than a trap down. If we break to the downside, be on the lookout for a trap, and then we see the market essentially going back up. Now, we come over and look at the futures markets real quick. You can see on the 4 hour chart, we've had this upper level consolidation, not a whole lot to be seen off this chart. Now, one of the areas I do want to watch is really going to be this minus development area. If we start getting back below the weekly value area high, then I want to look and see, can we come down towards 902.75 or even down here towards 864? Somewhere within that zone is going to be a target location I would want to focus on if we get back below the weekly value area high. Then as we come over and look at the daily profiles, notice today basically a very well-defined D as in dog shape profile, and that comes on the back of Friday being a relatively tight range as well. Now, if you notice, we did slightly get above the overnight value area high, but then boom, smacked right back down towards the point of control. Then we came back up, boom, point of control, came back up, point of control. So this is a lot of calls being built. Now, what is the market waiting for is the main question. We look at value area high, would come in at 20,090.50 with the point of control, 20,074.50. Value area low coming in at 20,042.00. Now, I do want to remind you guys of something real quick. If we zoom this chart back, I'm not saying we're going to do this tomorrow, but sometime in the future, if we start to see a pullback, we still have this untested value area high down here at 19,222.50. If things start to really sell off, and if we get below this basically consolidation right up in here, watch out for the market to potentially drop down now. Now, I don't think that's going to be a tomorrow event. And when we look at the economic news that we have coming out for tomorrow, let's see what we have on deck. At 9 a.m., we have the S&P CS Composite 20 HPI. We also have Bowman speaking. Then at 10 a.m., we have consumer confidence, followed by Richmond Manufacturing Index. So we have a lot of news. We have a little bit of news tomorrow, but I don't know if it's going to be enough to really get the markets cooking to the downside. Wednesday, we have new home sales. But then on Thursday, all right, Jay Powell is going to be taking the podium. Now, I don't know if this is going to hold as much weight as it normally would, since we just got over the FOMC statement not too long ago. I don't think we're going to learn a lot more between then and between when Jay Powell takes the podium later on this week. Now, when we come over and look at the SPY, I'm still going to classify this as a candle of indecision, basically a spinning top type of candle. If we start to pull back, watch for this gap to be filled, and this whole high volume area over here on the composite profile will be a target that should attract price back down towards it. Out here on the 4 hour chart, we can see the MACD indicator starting to get that arc effect. And then on the 1 hour chart, we've already had a bearish cross working our way down towards the zero line. On the 30-minute chart, though, you see we have that D as in dog shape profile. And just like we talked about with the NASDAQ, I expect the first way we break, more likely than not, is going to be a trap, and then look for the market to go back the other way. That's the way I'm going to look to play this out here tomorrow. Now, we come over and look at the futures markets real quick. Notice, all right, we came down a little bit. However, we did not quite make it into this minus development area. We tried to give it a shot. We just did not make it yet. Now, we want to mark this area off anywhere from 57.40 down to about 57.35. If we start breaking back below the weekly value area high right here, this will be a target I want to focus on, along with this high volume node and then the weekly point of control. If we stay above value area high, there's no need to even worry about those price points. Then we come over and we look at the daily profiles. What do we see? Well, value area high is going to be up here at 57.79.00. Point of control will be 57.72.50. Value area low will come in at 57.69.00. Now, with that being said, I'm still going to classify this as a D as in dog, even though this kind of, you can make the case for a P-shaped profile, but for all intents and purposes, we basically just chopped all around. We had that little bit of a sell-off during London. Now, if we can start breaking below value area low tomorrow, tonight, wherever the case may be, then I want to turn my attention down here towards these candle bodies at about 57.55. If we start breaking above value area high, I want to look to target the highs from today, but then more importantly, I want to see, can we go back and target the highs out here from September 19th, somewhere in the ballpark of 57.97 and a quarter. Now, anything above the high from September 19th, we simply got to hold our breath and say, all right, how high is this market likely to go? Now, if you guys want to see the pros and cons with fast track trading, watch this video right here.